Hey everybody, this is Jim at SP500chart.com. It's about 2 o'clock in the afternoon on Sunday, February 2nd, Super Bowl Sunday, so I'm doing this video now. I sometimes on Sundays like to see kind of what's going on with the opening of the futures, but be honest with you, on a Sunday evening, 6:30, that's a real crapshoot. So let me read this to you, then we'll take a look. The website in this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. Now, I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we're going to start by taking a look at a 30-minute chart. And the main reason I want to do this is just as by way of review, to remind you that when we were up over 1800 for about roughly about a month here, late December through much or most of January, it appears to me that we really ended up making a double top. We've got resistance up here just a little bit above 1850, and you can see that twice just couldn't make it. And since then, the S&P has sold back to a pretty decent amount, down what about from 1850 to 1782. That's roughly 68. Let's call it. It's not a huge amount, but let's call it a little less than 4%. The way you measure a double top, and this is a small one, is you do it the same way as any other reversal pattern. You look at the height of the pattern and where it broke down, and then you know to expect a move of at least that height to the downside. So when this pattern broke down, we knew to be looking for a move to about 1780. Now, what's interesting is what has happened in relation to a couple of longer-term trend lines and where we bounced along in this region really all week long. And let me show you what I'm talking about. We've been bouncing on a line that is going to get a little bit more respect now. I'm going to make this a bright red just because I want it to stand out a little bit more. And this line is if you'll remember, has, well, got to go to a 4-hour chart, has these three peaks. Now, it moved a little bit when I zoom out to the 4-hour chart, but when we go back to the 30-minute chart, this line will be in the proper position. A lot of things move around for some reason when I go to the 4-hour chart. But you can see this line, which used to be resistance, has pretty much all week served as support. This is the proper location for that line. So I am still expecting something of a decent bounce here. And judging by the pattern that we've been juking and jiving in for the entire week, I would expect a move. If we do indeed break out over this resistance here, which is this little orange line, I would expect a move up to about 1816. Interestingly, that level is the, if you don't mind me calling it this, that level is the neckline from our double top. It's not really a neckline because there's no head, but the way you measure a double top is you look for the lowest point that differentiates the two tops, and that is a level that should serve as resistance. So it will be interesting if we manage this week to rally up above this orange line and get up to 1816. It will be very interesting to see if the S&P has the strength to take that out. The other thing I need to show you is, and this is again, I'm thinking a little ahead of the game here. But if we draw a line right here, okay? And we have this rally, then this rally, and then we come back to 1816 and fail to get any higher and then come back down. I think you know I'm not saying this is going to happen, but I'm saying I think this is something we need to keep on the radar, because the way we've taken out some trend lines lately, even though we are currently above our red line, if we were to rally up to about 1816 to the 18 teens somewhere and then get turned back and then break through this purple line, what we may be doing right now is the beginning of the formation of a right shoulder. That's all I'm going to say right now. I'm not going to measure this pattern because it hadn't happened yet. We may very well not do that, but it is certainly worth keeping our eyes on that and not turning a blind eye to that possibility. I mentioned also during the week that there's some interesting things that happen sometimes with lines that radiate from a particular high that is fairly significant. And as we radiate these lines down, you can see that for example, this one right here, with the exception of this one little move at the end of the day on the 23rd, this line served as resistance in that really significant down leg. Then we rallied above it, had a little something of a back test, not really. Then we got over this line, back tested it again, set up a line of resistance right here, got over that on Thursday. I thought we were maybe about ready to get on up to 1816, but Friday we came back with more weakness, and as you can see, now we've got a new trend line on the chart. Again, another one in this fan of lines, and how it is also playing. It played support twice on Thursday, broke down on Friday, got back over it, support, rallied up to about 1793, I believe we were, about 93, 1792, and then we came back down and we ended on this line. So with that note, I'm putting another one of these fanned out lines on our chart with the same thing. Will we be able to rally up over this line? And the idea here is that as you break more and more of these fanned out lines, eventually you hope that you keep making it until the point to where you break out above one that is horizontal, because that would signify the market's willingness to move on up, obviously at this point to a new high. So what pattern might we be making down here? Well, if we ignore what took place on Thursday, you could say, well, look here, we got a dip, a deeper dip, and another dip, and since we had a little dipping back here, maybe we're dipping again over here, maybe we're doing a reversal. Well, that could be. But if we take Thursday into account, then we could be dealing with something we haven't really seen that much. It's possible that we're dealing with a diamond pattern. And unfortunately, I'm going to hold on a second. I'm going to look something up real quick before I say because you don't see diamond patterns very often. I want to make sure I say the right thing here. So hold on, let me do a little research in a reference guide I have, and I'll get back to you. Okay, I'm back with you. What I remembered was correct. In John McGee's technical analysis of stock trends, there are a number of chart examples of diamond patterns. Typically, a diamond pattern occurs at a top. They can occur as consolidations, either going up or going down, and I did not find any examples of reversals. So I don't think we need to say to ourselves, well, then this means we will be taking this out and moving down lower. I don't think that means that, but the fact that we don't have a lot of examples of diamond bottoms. We got examples of diamond tops, not a lot of them as diamond bottoms. I wouldn't be too terribly concerned. All I will say is this: is that if we take out 1770, then I think you can say that that we should be moving down to about whatever the height of this pattern is from where we take out this line, actually. So a move to test this kind of golden greenish colored trend line is possible if this pattern breaks out to the downside. So far, the market has been willing to take out a series of descending resistance lines. Let's see if it's got another one in store for us. This could reverse, or it could go down. If it reverses, then I think we go up to about 1816. If it goes down, then I believe we come down to this level right here as a minimum. And let's find out. Let's remind ourselves where this trend line comes from. This trend line has two touches back in June of 2013 and October of 2013, and you can see, again, this is a really cluttered chart, but you can see that this line is also a parallel line to what we have up here. So that means there is a chance that what we've been seeing since getting over 1600, or getting over it and then pulling back, it could be an interpretation of this could be we're just in a rising channel. So if this breaks down, I would say let's at least have an eye for support at that greenish gold colored line, again right here. And if it did break down, that would be about what the target would be. But we've got two support lines underneath us that could very well turn this little diamond into a reversal. So basically, all week, sideways, trying to decide, are we going to consolidate here and reverse, or are we going to consolidate here and continue? If we continue, then I would look for something in the depending on when it might happen, look to tag this line probably in the mid to high 1740s. If, however, we break out and go up, then I would look for some resistance at about 1816. So guys, I think that's good enough for Super Bowl Sunday. Let's see what happens. I would love to see some strength on Monday. It's the first trading day of February. Maybe that'll give the markets a little bit of a boost. But anyway, I hope your team wins the big game. If you're interested in that, I think it'll be a good game. And have fun. Take it easy. Don't worry about the markets. I'm not. And we will do another video tomorrow afternoon after the markets close, and maybe have a little bit more light to shed on this somewhat tenuous situation. Thanks again for watching. Take care.